I think that what's happening at NIO actually reflects a broader trend of maturation in the EV market. The days of limitless capital, being able to tap into the market all the time and chasing growth at all costs, those are over. Those are gone. Those are finished. Even companies like NIO, who differentiated themselves through premium experiences, have to show investors, have to show the market a clear path to profitability. William Lee seems to understand this. His internal speech clearly emphasized becoming more rational in cost control and resource allocation. If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. Today, we're going to be talking about NIO, the company that I'm bullish on, invested in as well, balancing their customer excellence, the reputation that they have for that, the service that they provide alongside with that, along with the truthful financial realities of the situation. In our last episode, we talked about the Chinese EV market more holistically, Tesla's China challenges, NIO's struggles, of course. We'll dive more into that in today's video, and then Porsche's identity crisis. Today, I want to zoom in on NIO because there's actually some more information that has come out over the weekend, just yesterday, about the company's internal restructuring efforts. William Lee, NIO's founder and CEO, recently gave a candid internal speech to employees, and it outlined the cost control measures that we've been talking about, the CBU, Sell Business Unit. Now, this isn't just a typical corporate restructuring. What makes it particularly interesting is Lee's surprising frankness about NIO's spending habits. In his speech, Lee emphasized that NIO needs to answer a fundamental question. What effects are their massive investments actually producing? We're talking about more than 100 billion RMB in R&D spending annually, billions in marketing, and substantial staffing costs. And so Lee didn't even mince words. He acknowledged that many investments have been inefficient and that even his own decisions need review. Here's what I find even more interesting. He told employees, in the future, if it's something I say we should do, if it doesn't make financial sense, don't move forward. That's an extraordinary admission from a founder who's built a company around an unparalleled customer experience and almost regardless of cost. The urgency is clear. NIO is aiming for single quarter profitability by Q4 this year. With only 2 quarters to go, they're implementing more rational cost control, resource allocation, and priority setting. This includes having R&D employees report their working hours, a practice that might seem standard at most companies but apparently wasn't the norm at NIO. Now, this brings us to the fascinating paradox at the heart of NIO's business model. While they're tightening their belts internally, NIO has built perhaps the most extraordinary customer service reputation in the automotive industry, and I'm not exaggerating here. A recent article highlighted just how far NIO's excellence has gone. Their driving service, launched in 2022, starts at 100 yuan per hour and has evolved into something far beyond what most automakers are offering. We're talking about NIO employees who will help customers with everything from changing their tires to resolving insurance disputes to picking up children to accompanying medical procedures. There's even a story about a user who got into an accident online and called for 3 NIO representatives, one to argue with the other driver, one to handle the insurance company, and one to comfort the owner. This level of service has created an almost cult-like loyalty amongst NIO owners. But here's the question every investor should be asking. Is this service model sustainable? NIO sold about 220,000 driving service orders in 2023, serving around 70,000 people. One particularly enthusiastic owner placed 374 orders in a single year, and that's more than 1 service request per day. The service has proven so popular that NIO expanded it in 2024 to non-NIO owners and launched its premium business service in October at around 180 yuan per hour. They've essentially created a high-margin service business alongside their automotive business. But while this service excellence business has created a lot of brand loyalty, it comes at a significant cost. NIO has maintained 181 NIO houses across China. You all know what these are: luxury club houses that are over 1,000 square meters in prime real estate locations. But one of these essentially costs 40 million yuan alone in annual rent. To put that into perspective, NIO needs to sell an additional 100 EC7 just to cover the rent for that single location. Multiply that across their entire network and we're talking an additional 18,000 cars that they need to sell annually just to maintain these spaces. Is it any wonder why NIO has lost over 80 billion yuan in their 11 years of existence? The company has made service its signature product and now it has to reckon with the financial reality. And the reckoning has already begun. We've discussed it in the past few videos on the channel, but NIO has already moved their after-sales service warehouse to a location 10 kilometers away from the previous site, reducing costs by over 70% per square meter and saving 200 million yuan in operational costs and logistics costs. Many previous self-operated services like their chauffeur service, painting, and car washing, those are all now being outsourced to third-party companies. Staffing levels, they're changing dramatically too. Where NIO once operated with 3 people per store, they're shifting to a model where one person can manage 3 stores. So what's the result? The service operations team has been reduced by 20% compared to the end of 2022. Most recently in March this year, NIO has laid off approximately 10% of its employees in customer service, NIO House, after sales, and other service sectors. And in some regions like Shenzhen, the reported layoffs have actually reached around 50%. These are some dramatic changes for a company that's built its reputation on service excellence. The good news is that after all these changes, NIO's after sales service business achieved full profitability by 2024. That's a crucial milestone suggesting that these efforts are actually bearing fruit. But the question remains, can NIO maintain its reputation of service excellence with fewer resources to help them? I think that what's happening at NIO actually reflects a broader trend of maturation in the EV market. The days of limitless capital, being able to tap into the market all the time and chasing growth at all costs, those are over, those are gone, those are finished. Even companies like NIO, who differentiated themselves through premium experiences, have to show investors, have to show the market a clear path to profitability. William Li seems to understand this. His internal speech clearly emphasized becoming more rational in cost control and resource allocation. He acknowledged that management work needs continuous improvement and that NIO needs to regain its dignity in this regard. So this restructuring reminds me of other tech companies that initially prioritized user experience and growth over profitability. Amazon ran at a low cost for years while building infrastructure and customer loyalty before becoming wildly profitable. Uber similarly burned through capital while establishing market dominance before implementing stricter financial discipline. The key difference is that NIO operates in the capital-intensive automotive industry with fierce competition. They don't have the luxury of extended unprofitability that software companies might enjoy. And their competitors from BYD to Xiaomi to Tesla are all becoming more efficient while also improving their own service offering. They've built tremendous brand equity through service excellence, and they have customers that genuinely enjoy and love and are loyal to the brand. That's definitely not something that you can easily replicate, but they've done so at unsustainable costs that now require restructuring. The success of that restructuring will ultimately depend on finding the right balance. Cut too deeply and they risk losing the service differentiation that made them special. Cut too lightly and they won't achieve the profitability that they need to be sustainable. So in my opinion, NIO's making the necessary moves even though they're coming later rather than sooner. The service first approach created a strong sense of customer loyalty that gives them some breathing room to implement these changes. If they can maintain 80% of their service quality while dramatically increasing operational efficiency, then I think that they have a fighting chance. But the clock is ticking. With profitability targeted for Q4 this year, the next 2 quarters will be crucial, and so will the earnings report that should be coming out on Friday. I think everyone should watch the delivery numbers closely, but even more importantly, watch the customer satisfaction metrics. If service quality declines precipitously, NIO's core differentiator starts to erode. Most promising sign is that William Lee's personal involvement in supply chain management and cost control speak volumes. When founders dive deep into operational details, it often signals a meaningful transformation. Lee built NIO's service culture. So if anyone can preserve its essence while building a more sustainable business model, it's for sure him. But ultimately, NIO's story reminds us that customer experience must eventually translate into sustainable economics. The premium service model created tremendous value, but that value needs to be captured. Anyways, that's it for today's episode of the CF podcast. I hope you found it enjoyable, insightful. Hope you like this deep dive. Good to be back. We will see you in the next episode. Make sure to hit the like button. Make sure to hit the subscribe button, notification bell icon, share the video. Leave a comment down below. And thanks for watching. This is Obi. Goodbye.